Again, I don't think that it's necessarily a safety play, could be a currency play. And of course, we always hear about, well, the dollar's too strong and gold should be going down. Well, guess what? The dollar's going higher and gold is going higher. And at the end of the day, it's a perfect hedge. It's a perfect roundhouse to do that and use gold. But gold may, again, that there's not enough gold in the world to cover the amount of paper that has been sold on gold. So if we're getting a little bit nervous and you get a little bit of a short squeeze, that brings the professionals in to buy. And that's, I think, what they're doing.
For decades, the global financial system has been built on the illusion that governments can print unlimited money without consequences. That illusion is now unraveling. The U.S. is drowning in debt, with $37 trillion in federal obligations, excluding over $200 trillion in unfunded liabilities, and $900 billion in annual interest costs, pushing the system toward a breaking point. We are in the early phases of a global monetary reset, as the world gradually moves away from the US dollar as the dominant reserve asset. China, Russia, and Middle Eastern nations are stockpiling gold instead of US Treasuries, while central banks quietly prepare for a post-dollar era. Gold playing as a safety hedge in this environment. The speaker, Todd "Bubba" Horwitz, is a veteran trader, market analyst, and founder of Bubba Trading. He explains that social media users, including a Republican lawmaker, have urged Elon Musk and his Department of Government Efficiency, DOGE, to conduct an audit of Fort Knox, the military facility that holds roughly half of the nation's gold reserves. According to the U.S. Mint, Fort Knox contains approximately 147.3 million troy ounces of gold, 4,581 tons, representing half of the Treasury's total stored gold. With gold priced at just under $2,900 per troy ounce, based on data from the foreign exchange service ECE, the holdings in Fort Knox could be valued at up to $426.3 billion. We're about to explore the video, but first make sure to subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
Well, I mean, again, you look at the markets you look at the equity markets over the last couple of weeks. Now, they've been higher. Okay. Last week, the previous 2 weeks, we had those 2 Monday disaster days. That creates panic. And most investors do what we would call the wrong thing. Okay. They sell their good assets trying to hold on to the crap. And of course, that would coincide perfectly with selling their gold, which they cannot help but be profitable on gold. So they like to take the winners off the table when that is exactly backwards. You want to let the winners continue to run until they tell you that they no longer can run. But that's why the average investor usually loses their, because they want to hold on to the dogs, the ones that are going down. And there's an old saying, buy the strong and sell the weak. Okay. It doesn't matter. Stay along the strong and get rid of the weak. But people don't do that. They do the exact opposite. So it makes a lot of sense to see people selling gold because it's been one hell of a strong asset and it should continue. But again, when you're dealing with human psyche, you're dealing with psychology, people don't want to take a loss. They don't look as their overall net worth. My net worth is $1 million. Okay. I'm not looking at it as a package worth $1 million. I'm looking at each individual asset. And I'm like, well, this one's losing. I'm going to hold it because it's going to come back. This one's really strong. I'm going to sell it because I want to take the money. Completely backwards thinking, which is very common in the investing industry. Well, I don't even know if you want to call it safety. I think it's a great play to buy gold here. I mean, you look at Trump's, finance guy, Bezos, he's a gold bull. Okay, there's your guy. You got Ron Paul. You got a big thing now talking about let's go audit the Fort Knox. Okay, which we haven't done since 1974. Okay, you got a lot of reasons to believe that gold is going higher, along with Bitcoin and cryptocurrency, because the new director is a fan of both. Okay, so that there's not enough gold in the world to cover the amount of paper that has been sold on gold. So if we're getting a little bit nervous and you get a little bit of a short squeeze, that brings the professionals in to buy. And that's, I think, what they're doing.
Todd highlights that gold has long been a vital component of central bank reserves due to its safety, liquidity, and ability to hedge against inflation. During periods of global uncertainty, gold serves as a protective asset, mitigating risks such as trade imbalances. According to data from the World Gold Council, total demand for gold, including over-the-counter OTC investment, grew by 1% year-on-year in Q4 2024, reaching a new quarterly high and a record annual total of 4,974 tons. Now let's redirect our attention to a video.
I mean, you think about banking as a business model. A, they can borrow money from the Federal Reserve, on the Fed funds rate, right? And we've seen that over the past 6 months, the Fed funds have been cut 1% or 100 basis points. But if we go back to September 18th, the original cut, the 10-year notes were trading at 3.5%. The Fed funds rate got cut, which means that the bank, if they don't pass the rate cut off to the consumer, the banks are making more profit, which is exactly what has happened. So move the clock forward. We're 100 basis lower at the Fed funds rate, which does not help you and me, the consumer. The banks don't have, just because they got a rate cut does not mean they have to cut the rates for you, the consumer. So now the bank's borrowing rate is 100 basis points lower. The bank's lending rate is 100 basis points higher, saying the banks have got a 200 basis point extension or a raise, okay, to lend money. Now, again, the other problem is that when they borrow money from the Federal Reserve, okay, they can take that money and take that liability and turn it into an asset and then lend out 10 times the amount. So I think what Vicente is saying is no more. You cannot do it that particular way. I think that that's the problem. And that is what's created the banking problems we've had over the last 100 years have been directly correlated to the banks maneuvering, because knowing that they had the Federal Reserve to bail them out. Okay. And I think that Vicente is saying enough, where the Federal Reserve is not going to bail you out if you continue at this particular rate of basically printing new money. Because when a bank lends out at a 10-to-1 rate, okay, called fractional banking, they are actually creating new money into the system. The Federal Reserve is nothing but a cartel, okay, owned by the banks. I mean, why don't we just do, if you remember, well, you may remember, you're young, and I'm young, too young to remember it as well, but the original gold to silver ratio is supposed to be 15-to-1. Okay, it's now 90-to-1. Okay, the banks were supposed to be able to lend on assets that they held, okay, which in those days was gold. Okay, in fact, there are stories going back, if you've read The Creature from Jekyll Island, that they used to take rocks and paint them gold, throw some real gold on top, so it looked like they had more, so they could lend it out. Okay, what Vicente, I believe, is saying is that if you're going to lend out 10-to-1, you better have the assets in your vault to lend out that 10-to-1. You can no longer lend out on air, or no longer take a loan from the Federal Reserve, take a liability, spin it through accounting, turn it into an asset, and then lend out $10 million. They were not meant to manipulate interest rates. Okay, they were not meant to make it better for those who have money to be able to borrow money. They were meant to create stability, and they did not do any of that. We are not supposed to be bailing out a business that goes bad. In the true capitalistic system, people go out of business all the time, and somebody else comes in and takes their place. So I would love to see Ron Paul come in. I would love to see if they're never going to end the Fed, or at least not our lifetime, I don't believe.
Todd Bubba Horwitz explains the unraveling of the global financial system, driven by unsustainable debt levels and the decline of the U.S. dollar's dominance. As nations stockpile gold in anticipation of a post-dollar world, the demand for gold continues to rise, reinforcing its role as a safe haven asset in times of economic uncertainty. The growing reliance on gold by central banks and investors highlights the importance of this commodity as a hedge against inflation and global instability. How do you think the global transition away from the US dollar will affect financial markets in the next decade? With rising demand for gold, do you believe it will continue to be the primary hedge against inflation in the coming years? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.